Good morning, Ken. Thanks for joining us for the HFRX Mid-May Performance Snapshot. What was the leading area of hedge fund performance for the month through mid-May?
Thanks, Aniqua. May was an exciting month of hedge fund performance. We saw a reversal of a lot of the trends that really defined the reversal which occurred in April, making the first part of May look a lot more like what we saw in the first quarter, really dominated by risk-on sentiment, very different than what we saw in April, where the dominant trend was risk-off sentiment, lower equities, higher interest rates. In May, we saw interest rates falling and a strong recovery in equity markets. And associated with that, we saw the leadership in hedge fund performance from equity hedge. You can see here the HFRX equity hedge gained 1.64% in the first 2 weeks of the month. That was also followed by fixed income based relative value, which gained nearly 1%. The overall global index, 0.75%, about 0.5% gain in event driven, which is also a directional strategy. We actually saw some reversal in the macro and CTA space. We actually had those decline about 0.5% through the first 2 weeks of the month. We know that from the previous videos that that's the leading area of performance thus far for 2024. And we're going to talk a little bit about that later on in the video.
Okay, so what areas of sub-strategy performance was the leading area for the month through mid-May?
Yeah, that also was a reversal from what we saw in April, because you saw the leadership really come back towards fundamental equities. You can see here HFRX fundamental growth and fundamental value were the leading areas of sub-strategy performance, with a gain of better than 2% and about 1.6% from the two most fundamental directional equity strategies. We didn't see the leadership from the higher volatility areas like technology and healthcare, but certainly in the fundamental growth, fundamental value. We also saw strong performance from convertible arbitrage, which, as you know, is both positively biased towards volatility. Obviously, falling rates, rallying equities, all positive to that strategy, as well as strong trends in credit markets. We also saw a leading area from fixed income credit at about 1.2%, and then continuing from the trend from April, fundamental macro discretionary thematic also up about 1.2% the first 2 weeks of May.
So what areas have led hedge fund strategy performance thus far for 2024?
Yeah, as we've seen, the first quarter was extremely strong for the macro strategies. And then in April, when we saw an inflection point and reversal of the risk tolerance, macro was strong through the risk-on sentiment and strong through the risk-off sentiment as well. So even with the slight pullback in the first 2 weeks of May, macro is still the leading area of performance thus far for 2024 through the middle of May, with gain of about 5.3% thus far for the year. Equity hedge also strong, again, even with a pullback in April, still about 4.25% for equity hedge. Overall composite about 2.75% gain in the first 4.5 months of 2024. Directional event-driven strategies not quite as strong as equity hedge, up 1.2%, and then fixed income-based relative value arbitrage strategies, which, as you know, are credit and interest rate sensitive, up about 1% in the first 4.5 months of 2024.
Okay, so far for 2024, what are the areas of sub-strategy performance that are the leading areas through mid-May?
Yeah, it's been an exciting year in the systematic macro space in the first 4.5 months. You can see here leadership from the macro systematic diversified. These are trend following CTA strategies, quantitative, which can invest in hundreds of different assets, and they're really investing in liquid futures contracts, long and short. So they're really sort of directionally agnostic, low correlation with overall equity markets. But you can see here the first 4.5 months has been very strong for these, leading area performance up over 7.5%, over 6.5% in fundamental growth. It was interesting because obviously those were strong in the first part of May, but that includes a pullback in the month of April in that risk-off environment, that risk-off cycle that was really in the month of April. You can see both of those ahead of U.S. equities, which have gained a little bit over 6% in that first 4.5 months. And then other strong areas include what we see here: market neutral, fundamental value, and fundamental macro discretionary thematic, all leading areas of sub-strategy performance the first 4.5 months of the year.
Well, thank you so much for the update.
Yeah, thanks, Aniqua. There's a lot of great information, as you know, on our website. Please visit our newly launched website, just up in the last month, www.hfr.com. When you get there, please feel free to go to and visit the page about the investor guidebook. There's a lot of great information about the HFRX indices and all of our investable indices and how the use cases for many institutions for the institutions continue to evolve. If you're watching this video, you know we do regular videos on YouTube, so please continue to watch those. Please subscribe to the channel if you have questions. There's other areas that you'd like us to cover in greater detail. We can do those in future recordings as well. And then finally, as you know, if you have questions and you'd like to set up a call to discuss anything that we've talked about here today, you can send an email to me, Ken Hines. You can send it to any of your HFR representatives, or you can send an email to indices@hfr.com to set that up. Thanks, and we look forward to recording the next video for you next month.